Good morning, good afternoon, good evening, traders. This is Ed FX Trader again for another video. Now, I know I just recently did one, but I'm doing this one because there is something uniquely happening in the markets right now, especially as it relates to the pounds. Now, I did a video predicting that the pounds were going to fall, and indeed the pounds fell. Now I'm seeing something that is quite interesting. In my last video, or one of my previous videos, I spoke about the Australian dollar prediction that it's going to rise, and so I'm going to quickly do a review of that. So I'm going to bring up all the Australian dollar current crosses and then see what has happened thus far. So if you look carefully, this is the Australian Canadian dollar. You can see that this has already gone up 167 pips, right? If we look at the Euro Australian dollar, if Australian dollar goes up, then the Euro Australian dollar will go down, and this market has been going down, right? I made quite a few pips from this trade. If we continue on to the Aussie Swiss franc, you can see that this has gone up 200 pips. Aussie yen, this has also moved up 200 plus pips. If we look at the pound Aussie, then this one would fall, and you can see that it continued to fail as part of the prediction. Okay, so the Australian dollar indeed has gone up. But what I want to focus on today is the pounds, and I want to help you to understand my thinking, my thought pattern whenever I go to analyze the market. So this video is going to be much longer than the previous videos. Whenever I decide to analyze the market, when I'm going to look for trades, the first thing I do is that I will go to a higher time frame, or the highest time frame. The monthly time frame is the highest time frame that MetaTrader provides. Next to that is the weekly. So between the monthly and the weekly chart, I will look to analyze the market. So now the question is why? Well, a couple things to understand. One is that the higher time frames control the direction and the price movement of the lower time frames. In other words, if you look at the monthly time frame and you analyze it, and it says that it is going to go up, right, based on your analysis, right? But someone looks at the 4-hour time frame and it says that it is going to go down. What tends to happen is that it may go down and then go up. But the confidence that we have is that because we know the higher time frame wins, we can confidently trade in the direction of the highest time frame, or the higher time frame, because we know that once the higher time frame gives a certain direction, that will last. So if we expect the market to fall, notice that when I predicted that the pounds were going to fall, let me just show you something. The pounds fell. This is 1 month, then it pulled back, and then it fell again, pretty much another month. It just fell, right? 1,200 plus pips. That is the confidence that we have when we look at the higher time frames when we are going to trade, is that we can trade confidently, right? Even if it goes against us a little bit, like I said, that if the monthly time frame says the market is going to go down, and a 4-hour time frame that says that the market is going to go up, even if we place the trade, we place a sell trade because we believe that it's going to go down, and it goes up first, we don't have to panic, we don't have to worry, because we know that the monthly time frame will win. Only reason that may not happen is that the analysis was just wrong, or the losing percentage won. And by that I mean is that probability speaking, when you look at a trade, you are thinking, if I should see this 100 times, what will most likely happen? That needs to be the thinking whenever you trade. Now, I look at the monthly time frame to find direction. How am I going to find direction? Well, I'm going to look for U-turns, areas in the market where the market will turn around. I am going to look for support, resistance. I'm going to use trend lines, and I'm going to use Fibonacci. That's a whole different thing, but I'm going to use it in this video without going too much in it. So right here, I am looking at the monthly time frame, but I'm going to switch to the weekly because I want to show you something. This is the pound Australian dollar. Now, this is a currency that a friend of mine, he trades primary. So I know he's going to really appreciate this video. And when I predicted that the pounds were going to fall, I don't know how much he capitalized on it, but he says that he really appreciate the videos. So when I look at this, one of the key things that I always like to do is to see if it is moving, if there's a pattern to the market. And one of the things that helps us to identify the patterns that when we look at the higher time frames, there are less candles, less noise, so it's easier to see the pattern. So when I look at this I've identified this on numerous times, right? I see a pattern here. You can pause the video and you can look if you see the pattern as well, right? This is the pattern. I'm going to make this a little bigger. Notice that all I've done is to just connect a trend line across the lows, right? That's all I've done, nothing. So you always look at the lows, you look at the highs, right? And I always tell you that the monthly, if you look at the monthly time frames, they are normally in consolidation or a channel. A channel is a form of consolidation, just that it is sideways. When you look here, this is the pattern. It just is the pattern. When the market comes up, it falls. And so I look at the pound Aussie and I see this pattern, right? It's a clear pattern, no guess into it. It's very clear. What you and I, when we see this, we say, okay, well, the market has been operating this pattern. It is either that it will continue to operate in this pattern that it has been operating in from 2016, or it is going to break out of the pattern, and instead of going up, it will go down. It's just, that's the only thing that can happen. Okay, so we see the pattern here. When I look at this, I say, okay, well, I'm going to expect the pound Aussie to go up. Okay, that's one thing. Now, because I'm also a Fibonacci trader, I'm going to bring in Fibonacci's here, and I'm going to also show you something else. I'm going to bring in my fibs. Okay, and I start from here. When I draw my fibs, I see that the market has just hit a 618, which is an area that tells me that the market is now going to U-turn, and it has already started to go up. Okay, it has already gone up. So I see that here, and I say, okay, well, the pound Aussie is going to go up. Okay, let's continue. I go to the pound card, and let me just also show you something else here. There is an angle of U-turn that also the pound Aussie follow. If I take my trend line here and I just pull it up and I just go, I'm going to see this angle, and I want you to see this. That's all I'm doing. And if I put it around here, I see that there is an angle, and this is that the market also is operating on. It fell there, fell there, fell there. When it broke through, it then started to go up around that trend line. If I were to do it again, and I just do this and come around and drop it right there, I see a similar thing. The market falls here at this angle, at this angle, at this angle, and it rises at this angle. And I could continue, and you will see this numerous times. That is actually a trick that most traders don't know about, something that I learned. So if I come here and I were to do this, you will see the same angle. Fell, 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 up, right? So I see the pound Aussie, and I see that, this is telling me that it's going to go up. I now go to the pound Canadian dollar, okay, and I see something here again. If I connect a trend line against the lows, look at this. So if I just go out here and I just bring the trend line up, bam, right there. What is this? The market responds at this angle. Went up there, then it came down, went up there, and it is right at this point. This is a historic level. When I look left, right, and bring in a horizontal line and just drop it right there, when I look left, I see the market responds to this line. So this area is an area that U-turns the market. Whenever the market comes into this shaded region, it goes up, it goes up, it goes up, it goes up. If I look for an angle again, draw my trend line up, draw it across, I see this angle, right? Right here, it goes down, then this same angle pushes it up, and now we're right there again. Interesting. So that's 2 pound pairs. Okay. If we go to the pound Swiss franc, now I'm going through all the pounds, so I want you to see this. This is unique. This is really, really unique. Okay. If I put on my Fibonacci again, now funny thing that you walk away from, just pay attention to the 618 level of the Fibonacci, and I pull my Fibonacci from here to here. I've already hit a 618, and the market has not reversed, and that's what the market is to do at a 618. Also, for those who are familiar with candlestick formations, last week, because this was last week's candle, this candle is referred to as a pin bar candle. Okay, so this is a pin bar. What that means is that the bears is pushing the market down, but the bulls fought and bring it back up, right? So you have a long tail. Now there's a strategy around that, but we're not going to discuss that. So I look at the pound card, and I see in this area the market tends to fall. I say, okay, now remember I brought in this horizontal line. If I look left and I go left, I just want you to look at this. If I go left, and I did not make this up, what happens around this horizontal line? Now this is 2010. If you look around this horizontal line, the market falls and falls and falls and falls and falls and falls and falls until eventually it broke through. Okay, so because what we're saying is that we're not saying that there are times when the market will break through, right? Is this now one of them? I don't know. But if I see this 100 times, I am going to press the buy button. And if I lose, I lose. But what will protect me is equity management. So in other words, if I only risk 1% of my trade, I press the buy button on the pound card, and I put my stop loss below the low. The low is 1.6148. If I put this at 1.6140, 1.61, this is my stop. Let's say I put this, I'm going to put it in red, 1.6140. Okay, and I just press the buy button. The simple thing is that my risk here would be in pips. 1.614. My risk would be about 100, I call it 200 pips. Okay? But whatever that is, I'm only risking 1% of my account, or 3% of my, whatever your risk tolerance is. And I'm just going to press the buy button because I'm going to expect the market to go up. Okay? I'm going to expect the market to go up. And I'm going to expect it to at least go up to this level. At least. Okay? So I look at the pound card, I look at the pound Aussie, I look at the pound Swiss franc, and I see this again. If we look at this area, this is an area that the market tends to U-turn. I'm going to show it to you on the weekly. If you just look left, it has history of doing it. In this gray area, the market turns around. The market turns around. Now, up to the last time that it did this was 2018, December of 2018, the pound Swiss franc did it. And it has come back down to this level. This is clearly also a double bottom. This is a double bottom. And when you see a double bottom, that your prediction is that the market is going to go up. That's what a double bottom does. Okay? You can read about these terms. You have to be educated into terms like that. But just a little knowledge goes such a long way in trading. When I predicted that the pounds were going to fall, this pair formed a double top. See the double top right here? That's all it did. In other words, it came back up to a previous high, and now it has come down to a previous low. So that's now 3 pound pairs that we're seeing is telling us that it is going to go up. I spread my Fibonacci's. I've already hit the 618 level. So I'm going to expect this market. You have nothing to fear, you know. Equity risk management will protect you. If you are wrong, then we are just wrong. We cannot see this and not buy. It's just like I just have to buy. And if I'm wrong, I'm going to just be wrong. Okay? Again, if I were to pull out my thing and put an angle, you will see the angles. There is the angle. Right? So the angle up, 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 up. It pushed it down. Okay? That's a pound Swiss franc. If I look at the pound JPY, okay? Now, this one I want you to pay attention to. I'm going to bring out the weekly. Now, this market at one point was operating in this channel. Channels can be broken. See there? It was a perfect channel. Okay? It was operating in this channel. It was operating in this channel. And this was what was happening. This was pushing the market up, push it up, pushing the market up, pushing the market up. It was right here, and then it broke through the channel. Instead of going up, it went up a little bit, and then it broke through the channel completely. Right? This was the channel that it was operating in. So there are times that the market will break through the channel. It just is like that. Okay? But you must not fear it breaking through the channel or breaking out of the channel. Because if you looked at this and you say 1 time, 2 times, 3 times, 4 times, right? The market touched this level, it went up. And you were right here the 5th time. You said, well, I'm going to expect it to go up. Well, that time we were wrong. And that was what happened to me with gold. And it happens. This was that acted as support, became resistance, and pushed the market down. Then now, the channel now has switched. I want you to see what has happened. So it was operating in this channel. Now it is operating. I don't want to crowd the screen, so let me just remove a lot of these. Now it has switched channels and it is now operating in this channel, and the market likes to do this. Look at that, beautiful. Moved out of one channel and is now operating in another channel, and the market likes to do things like this. So if you look at it here, it's pushing the market down. All it did was switch channels, and this is pushing the market up. All it did was switch channels. Okay, so that's now 4 pounds that we have looked at, that is giving us or telling us that the market will go up. Okay, I'm going to bring in 2 more, and I'm going to ask you to pause the video and see if you can identify. See if you can identify the pattern. All right, here is the pound New Zealand. Okay, not sure why this is acting up. But if you look at the pound New Zealand and you look at the pound US, you will see the same thing. Okay, and we're going to leave those for you to analyze for yourselves and to decide. Look for the pattern in this trade, in this currency, the pound New Zealand, and see if you can find the pattern in the pound US on your own. So what does this mean for us? Well, I'm looking at all of these pound crosses and I'm saying, well, wow, this is showing some strong signs of the pound going up. So this is like, wow, I need to be looking to buy. Actually, matter of fact, in my main account, I'm already buying some of these. Guess what though? There is also an event that is happening over there in London, and that is they're going to elect a new president, a new Conservative Party leader, which will eventually be the president, which will be the president as well. Now, whenever there are elections, especially for these countries, there's always movements in the currency that represents that nation. And I'm looking at this and I'm like, wow, we're about to have a new prime minister, in London. And then there is also the issue of Brexit that is due to happen October 31st. So how do you approach this? Now, you can decide if you want to trade all the pounds. If you're right in them going up, then you make a lot of money. If you're wrong, you're going to also lose a lot of money. So if I were to take 5 of these and I risk 1% of my account, and instead of going up, the pounds go down, then I will overall lose 5% of my account. Question is, can you stomach losing 5% of your account? And that is what it boils down to. If we are right, there's a really, really good opportunity here. Really, really good opportunity to make some money. So you can decide to trade all, you can decide to trade some. Now, what I am doing is that I am trading the pound Swiss franc. I've decided to trade this one, the pound Swiss franc, and this one, the pound yen. Okay, I've just decided those two. Nothing deep, no deep reason. I like the pound Swiss franc though, because it's a little just clearer. I like the points that it is showing. I like the clear direction that is giving me. I really do like it. Okay, I like the confluence that I'm getting, right? So if I'm going to buy, I'm at low points now. This is the time to buy. So I want you to see this, and as a matter of fact, I'm going to boldly step out there, and I'm going to count this as a pound rally prediction. I'm going to step out there and say that I'm believing that the pound are going to go up. My only reservation in that is what is happening in London. But for all intents and purposes, the pounds are looking to go up. And so I'm going to trade 2 out of the 7 crosses that we have for the pound. I'm going to trade 2 of them. And if it goes up, then it means that I'll be in good standing. And if I decide to change my mind, I might, add in the pound Australian dollar, because it is a volatile pair, right? Pound yen, pound Aussie, those are quite volatile. You make money very quickly on them and stuff like that. So that is what I wanted to show you in relation to the pounds, right? In my next videos, I'm going to really start dealing with the psychological effects of trading and managing your emotions, because it is said that, truthfully speaking, trading is 30% technical and 70% psychological. So my next videos, I'm going to be focusing on that. This is Ed FX Trader signing out. Looking forward to the pound rallying. If we are wrong, then we are wrong. But when I see this across the board with the pounds, I'm gonna honestly tell you, it's highly unlikely that all of them are going to end up being wrong. But which one may be wrong, or if any at all, if any ends up being wrong. But I like the pound yen. This structure is so beautiful. It's just really a nice structure. Really is 1, 2, 3, 4, 5, 6. These things are not an exact science. I could have brought up the trend line up here, and so but this is what I am predicting. I'm really predicting this going up. All right. So what does this also mean? It also means that if you have pounds, saving up, or you have a foreign currency account in pounds, expect the value of your pounds to go up. Expect it to go up. All right. If you are looking to buy pounds, they are low right now, so now is the time to buy them. Buy them and hold them, and then exchange them after a few months if this work out. I would definitely do it before Brexit, tell you the honest truth, because that's a whole different thing by itself and stuff. So let's see how this plays out. This is Ed FX Trader reminding you that it is God who gives you the power to make wealth. Signing out. God bless you.